Yesterday's springboard data, UK shopper numbers were up.
Hello and welcome to the home of high probability trading. My name's Tim and I'm one of the traders here at the live trade room. I hope you're all keeping well, and we're just about to trade the US Open fully live and interactive for you. So what we look to do over the next hour or so is put together our trading plan, decide what we're going to be looking at from a trade selection perspective, where we're looking to enter those markets, what direction obviously we're looking to trade those markets. We've got a multi-time frame analysis of these markets, so we take our cues from the bigger time frames and we narrow down and we look to try and time those entries as best we possibly can. We are technical traders, so we do look for technical entries. However, we want to make sure we understand the fundamentals that drive these markets. We want to understand why markets are moving in the direction in which they're moving, and almost get that wind behind you when you're trading these markets. So hope you had a good Easter weekend, and of course hope you've had a good break. It's a good opportunity occasionally to take a few days off from trading the financial markets, especially with what's been going on in recent months. So it was certainly a nice little break, and we're ready to go again. So just quickly before we get into it, if you are genuinely interested in learning how to trade the financial markets, we can certainly help you as an organization. So just go to our website, thelivetraderoom.com, for more information. We've got a whole range of products and services available depending on your time availability, all at very, very low cost. So hopefully there'll be something there for you. And obviously you can experience kind of how we trade and through these sessions. Okay, so let's start then, and we'll see if we can make some cash for the session. So if I could just start with a risk warning, which is currently up on screen. Take a brief moment to familiarize yourself with our risk warning. And of course, the first thing we do before we trade is we want to be mindful of the news flow. We want to be mindful of if there's any major news events that are likely to impact our decision making. The last thing you want to do is get into, I don't know, the euro dollar buy trade just 5 minutes before a big ECB announcement, for example. So if you're aware of these news events, you can almost strategize around them. Okay, so let's get up FOREX Factory then. We can have a look through today's news event. What was interesting, we heard from Janet Yellen yesterday, and we know that the central banks have this accommodative stance, lower rates for longer, with as much quantitative easing as they can possibly squeeze. So there's an awful lot of cash flowing around the system, and they have been for probably 12, 13 years now. So that's going to be maintained. But now we've had the Treasury Secretary also advise governments and economies and Treasury departments to be able to be as accommodative for as long as possible. So we are living in this higher demand, potentially higher inflation type trading environment. So that's worth taking into consideration. So with that in mind, we've got this very supportive environment for you certainly US indice markets, and that's what that's likely to do is to drag other indices with it. So we might get a few opportunities around that. What that means for the dollar is it's likely to put the dollar under a little bit of pressure. What I'll do is I'll just take you back to Friday's non-farm payroll, which is a very surprising number. So firstly, the ADP was very much in and around expectations, 35,000 less jobs than anticipated. But on the Friday for the non-farm payroll, we're expecting 652,000 jobs added, and we actually saw 916. So a real sizable uptick in jobs. in the jobs number, and the unemployment rate came in as expected on 6.0, and the average hourly earnings has actually come down a fraction as a result. So within this number of 916, there's going to be in addition to many of your sort of service related jobs where perhaps the hourly rates might be reduced, there's obviously a whole range of new jobs out there, and it's just putting pressure on that hourly earnings figure. Okay, so a kind of a surprising, or let's say a much better than expected jobs number out of the US on Friday. So as a result, we saw the equities tick very, very nicely to the upside. We planned on Thursday to get into those trades, and they've moved on quite considerably. Yesterday, a series of bank holidays, of course, we were off ourselves. So and now today we've had the RBA very much in line with expectation. They kept rates at 0.1. So no major shocks or anything there for the Australian dollar. Not a huge amount to have to deal with today. Tomorrow we'll have the crude oil inventories number again. And I suppose the big news event for the week is the FOMC, where we'll have the meeting minutes be released. So we'll get to see in detail what's been said. On Thursday, we've got the Fed chair, Jerome Powell, due to speak again. So he's been speaking quite a lot over the last few weeks. Very much supportive of accommodation, of course. So he's due to participate in a panel discussion about the global economy at a virtual International Monetary Fund seminar. What's interesting is audience questions are very much expected. So we shall see how we get on with those. So on Friday, we finished the week really with Canadian employment data. So nothing of any major concern to any great extent, certainly with our potential trading opportunities over the course of this week. So a relatively quiet week. Okay, so let's get up the markets. We've I suppose the big moves from Thursday's session was in the US equity markets. We were looking to buy the Nasdaq above the high probability buy trade was above the 13,252, and if I just open this up a little bit, which was way back here. So we've had a really sizable accelerated move there on Friday. A little bit of rollover so far today, but we would still be looking for that pullback trade to see further continuation to the upside. So let's have a look at this on the daily time frame. So this is the 13,326. So it's actually above this little high in here. So it's there was our accelerated move. Certainly the majority of the move occurred on Friday. Once the markets kind of digested a little bit of no, sorry, this is yeah, this is yesterday. Sorry, yesterday is Monday, of course. Yeah, we saw that initial accelerated move on Thursday, and we saw some strong continuation in there. So let's have a quick look at the indices markets, because they're kind of leading the show really at the moment. Nice accelerated sort of 4-day bullish little mini trend in the S&P 500. A little bit of a hesitation in today's trading. Just having a little pause up at these highs, so we can have a look for opportunities there. The Nasdaq, very much the same situation. Let's put these all-time high levels just up here at these highs. They're your all-time highs. Dow Jones, just This level can just be pushed up to the upside. So you can see that the US indices are just taking a little bit of a pause in today's session. So this is the slightly unusual trading conditions behind the FTSE market today. A little bit of erratic price action today. The bias is clearly to the upside, so that's worth taking into consideration today. In fact, let's have a look at it on the hourly, and you can see the direction in which this market has been flowing. So we gapped to the upside, a considerable gap higher actually in this. So this was the close, that was the open, so considerable gap. And then what always happens is you generally see an attempt to close the gap. So now that's been facilitated. Now we can kick on to the upside, and there's your new high. There's your strong rejection of that high, and we've failed to kind of get up to that level ever since. So we can take the highs, and we can probably look to get in above this high here, the 68.23 level, somewhere around there. So what I'll do is so let me change this back to just a normal intraday high or intraday low. These levels represent intraday levels that we work with as the market is transitioning. So we record the low and the high in today's trading, and a breakout above that 68.31 level would constitute actually a decent opportunity further to the upside. Okay, so the FTSE, the DAX, we've gapped to the upside. So we'll have to see if this is like a shooting star. We'll see what happens tomorrow. Does the market actually open up a bit lower, or do we actually kick on from here? An interesting bit of price action that we'll keep a close eye on for the DAX. Now the DAX has been on a pretty significant tear for the last week, 6 days, 7 days now. Apart from that, it'd been pretty much moving sideways, and now we're looking at this type of potential price action, a little bit of narrowing, okay, over significant ranges. This is on a daily time frame, so from February, kind of mid-February direction, we've kind of failed to break through. So that's those are the equity markets. It's always interesting to see what impact has that had on the indices, and broadly the dollar has weakened, as you can see. Very little going on in the euro dollar. A complete retracement of yesterday's selling, so some strong dollar strength in that one. The dollar strengthening against the yen, so the yen is by far one of the weaker markets. Not so much against the pound. Just take today's low. So interesting market conditions today. Actually, we're trading inside previous day's highs and lows across all of these markets, we think. So across all of these dollar pairs, we are currently trading inside the previous day's highs and lows. The only exception to that is this little break here for the New Zealand dollar, just breaking below yesterday's low, but everything else is very much contained within the highs and the lows. If you can, failing to break above, failing to break above, below, and you can see that across the board. So the difficulty with that is you get a narrowing of price action on the smaller time frames. So it now, because we're getting a bit of softening across the indices markets, it's giving a little bit of support to the dollar, and unfortunately what that means is we're actually looking for these markets to move in the opposite direction. So we're looking for the pound to potentially strengthen, the euro to start to strengthen against the dollar, perhaps the CAD to continue its progress to the downside. A little bit of a breakout to the upside in the Aussie dollar would be an interesting trade, because it would be almost a double bottom now in this market, and a break above the 76.64 would actually constitute a structural failure now to the upside. So that would be an interesting trade. Unfortunately, at the moment, with all of these markets, they're currently moving in the opposite direction to the direction in which we'd like to take them. The euro pound, it's just, I mean, we had a bit of explosive price action today, just off the back of the volatile and the slightly bearish pound picture which we're seeing across most of these markets. The pound is weakening off, and it's doing so against the euro as well. So we are still in this market to the downside. Yesterday's low, we saw an uncomfortable bounce off yesterday's low, the 84.71. This is the nature of this market. We kind of have to work within the parameters of the market conditions, and it's been erratic on many occasions. Again yesterday, strong kind of reversal signal, but we're still below the previous monthly low. The euro yen, we're just getting up to these highs so far in today's market, so a bullish day. A bullish day, as you can see, for the euro yen. See, the yen is weak against the dollar and the euro, and it's quite strong against the pound. So it just shows that the weakness is actually in the pound today. Gold, you'd expect, you know, a bit of capital coming into the indices markets, into the sort of flight to safety trades. We're not seeing it in the yen. We're seeing it a little bit in the dollar, and we're seeing a little bit in the gold market. It's just finding a bit of a bid in and around yesterday's indecision. The quality of today's moves are not fantastic. There's a lot of sort of intraday trading going on. Like this is not great really for oil. This is the whole Suez Canal issue. All we're doing is just moving along in this fashion, and we're just going up and down, as you can see. So straight away our question is, do we want to be trading that type of price action? The answer is not really. We'd rather get in on a breakout to the upside or a significant breakout to the downside. So that would be our plan for crude oil. So at the moment it's just drifting sideways, and we'll let it do its thing really for now. Excuse me. And then we're back to the indices markets, which are just softening a little bit. So really, maybe you get a little bit more mileage out of the Nasdaq to the downside. It's marginal, and the high would be the all-time highs, but we had, oh, of course, yeah, so we're actually, the all-time high is just above it, of course it is. So let's remove that. Sorry, I forgot I was dealing with the Nasdaq there for a second. So this is your previous high, 2, 4, 6, 8 weeks ago was our previous high. You can see prices just pushed up to that level and then reversed, and now we're sort of grinding higher once more. That's on the weekly. So yesterday's move to the upside was quite significant, and now we're getting a bit of retracement. And I've mentioned the word retracement a few times across many of these markets, and that's probably the viability of the trade in this session, is that Nasdaq to the downside, and the level at which this might be worth getting into is the 13,540 level. So all we'd be expecting is a little bit of softening in this market, as you can see, you know, something like this. So and then there'll be opportunities to actually buy at a slightly lower price. So it's a short-term sell trade. It's not something that we want to get committed to the downside. If we look for the Nasdaq lower, you see there's dollar weakness, there's pound weakness, which see there's no value in the pound dollar to the downside unless we break below the 2-day low. The dollar yen, we're just breaking to the upside. Again, we're just retracing yesterday's moves, basically. That's all we're really doing. It's hard to pick a retracement trade, really, in like a lot of the moves have already occurred. New Zealand is probably you're just running into all these highs. There's lots of support around that level, and what we would be looking for is actually the turnaround trade to the upside. So you can imagine something like this. At that point, we would get really quite interested, because it would be a structural failure to the upside. So this is what you always see in these markets. Same to the downside. Whoops. So let me start that again. So from a low, the market pushes to the upside, creates a high, then we make a new low, and then we fail to make a new high, and we get that structural failure, this time to the downside, before the market comes back and retests. So we're constantly seeing structural failures higher and lower, and this would constitute another structural failure to the upside. So this is how we can read these markets the way that we do. It's just now we're just at that sort of poor quality trading opportunity. It's really hard to pick a retracement trade. We're not getting huge opportunities across any of these markets at the moment. Nearest thing is the New Zealand dollar. Just poor quality trading opportunities today, really. Okay, let's have a look at this New Zealand dollar to the downside, because will we get further downside moves in this trade? You see, we're running into all these highs. So when the market pushes lower, you're looking for previous highs to provide support. So I suppose that's why previously these levels were kind of held up, and now we're at that level again. So we've already had like a mini structural failure actually to the downside in this trade. So what we would like to see is a little bit of an attempt to push higher, and you want to see that fail. And there's your high probability or higher probability sell trade. Right now it's just a fairly sort of straight pullback, really. This is on an hourly time frame, so the last 5 hours, just a straightforward pullback actually to support. So will this market be taking the next leg to the upside or not? We really don't know. We shall have to wait and see, I guess. So even that opportunity is not fantastic. Let's have a look at the there's a structural failure to the downside. Just trading in a relatively tight range, as you can see. Oh, sorry, let me put on the squawk. See if there's any further news updates. The uptick in the vaccine rollouts is underway, with economies certainly across Europe looking to play catch up. They've had a pretty poor last, let's say,
in geopolitics,
3 months
Russia
of it.
is said to have started military checkups. That's RIA citing Minister. Russia starting military checkups. And crypto news, just to make you aware, the Goldman Sachs CEO David Solomon currently speaking on CNBC regarding Bitcoin.
Just to keep a close eye on the 10-year Treasury note, you're hearing an awful lot about the yield curve, and you can see prices topped out up at these highs at 175. We saw a bit of a softening, an acceleration a little bit yesterday, so we're in and around that sort of 170 level. So we're only a small bit off new highs.
Russia said to have started military readiness checks, according to RIA.
This is on the daily. Sorry, this is on the daily time frame, as you can see.
The RIA citing the Russian defense minister on these military checks.
So at the end of March, we peaked at 175.63. We failed to make those new highs, so we've got lower highs now in this market, and now we want to see if we can make lower lows, and then it might be on its way to a bit of a correction if we get below this 167.25. Maybe that might represent actually even better conditions for the indice markets, because the indice markets can react quite aggressively towards this increasing yield curve. We've had all the central banks say there's nothing to worry about, there's things that we can do.
More from Interfact reporting Russia is to hold over 4,000 drills in all their military districts.
So this is where we are over a monthly basis. You know, the yield curve is pushing higher, and we're getting this rollover in price. So this would be a significant change potentially. Like I said, if we were able to roll below that 168, 167 level. Over a 3-month period, it's a relatively sharp rise, and that's been the problem. That's why, you know, the market's freaked out a little bit. Was the steep incline of the move. Okay, that's just a little bit about the yield curve dilemmas for these markets. Aussie dollar, New Zealand.
Goldman Sachs CEO David Solomon wasn't drawn into answering questions on Bitcoin in his CNBC interview. Said he's not going to speculate on where the regulation on cryptocurrency is going to go.
Since they're talking about Bitcoin, let's have a quick look at it. There's your all-time high at 61,000. There's your recent low at, let's say, 50,000. So when you think about it, if we're up at the 60,000 level, and prices in a relatively short period of time can move down to the 50,000 level, what's that, like a 15% devaluation in a very short period of time, and that's really painful for those trading with leverage, to really suffer that kind of pullback. So you either need to be in considerable profit, or you expose your capital to something we've seen over the last couple of weeks, which are margin calls, and some markets, you know, freaking out as a result. And big banks like Credit Suisse are paying kind of a £4 billion bill, really, as a result of a lot of poor quality risk management. So we assume that the banks can manage risk effectively, and sometimes they get it very, very badly wrong. Okay. So Bitcoin is just really sitting around that sort of $58,000, $59,000 level. We're virtually at all-time highs. Look at it on a monthly. You know, we've just been rocketing to the upside, and now we're having a little bit of a pause. But saying that, we're 6 days into the month, so we shouldn't be too expectant, really. Okay, so this goes back to the Nasdaq. It was be a break below the 13,540 level, and I think the only other market really potentially the New Zealand for today, but it's just a poor quality trade. Maybe just further downside for the Aussie. There's certainly a pullback in this market to the 76.23 level. There's your little structural break to the downside. There's your pullback trade before you get the next leg lower. So we'd be looking to kind of add to that, really. We'd expect prices to sort of come back to the 50 period moving average as well on these smaller time frames. Just depends how much conviction we have to the downside, and we don't have massive conviction to the downside today. So therein lies our difficulties. So sometimes when we trade, if we're in doubt, we stay out, and that's probably going to be what we're looking to do. So for the US trading session, we'll just focus on a bit of US indices weakness. Not that we think that there's structural weakness, but it's more intraday weakness. So it's very much a short-term potential sell trade. Let's go into this on a smaller time frame and see how this is stacking up. So yeah, there's your high, there's your real rollover trade, and actually we were looking to buy this trade above the 1352, way down these lower levels. In fact, it's off the page still. The 13252. So we were looking to get in on this little breakout. This is what we planned to do, and as you can see, markets just after long periods of sideways moving price action, then rocketed to the upside. So again, they're trades that you need to be quite patient with. And if we get this rollover trade to the downside, what I'm going to do is I'm going to put this level in here, and I'm going to put this level just in here to signify that the other sort of planned entry was at that lower price here, the 13174, but we ended up planning to get into it at this higher level. So a really good profitable trade there. And now what we're looking for really is for this market to actually roll further over short term, down to the 13410, and we'd be looking to actually see if we can capitalize on a bit of short term indices selling. It just looks like it's wanting to continue its little move to the upside. So that's 13,540. Okay, so these markets are pushing to the upside. See, if these roll over and start making new highs, then with the Dow Jones and the S&P, then what we are doing is buying all-time highs. So we just got to be mindful of that fact. And the opportunities across the dollar pairs, fortunately, are not fantastic. So we'll just look to see if this price here, just pushing higher, just rolls over to the downside. If so, we might consider getting into the downside, and if not, we'll just pack up for the day really, and look at these markets tomorrow for some continuation to the upside. Certainly above that 13,639 level would be an interesting buy trade. Let's see if we get that trade today. See, we look to buy and sell at levels of support and resistance, and this is making its own resistance here.
Comments from the German Bundesbank, the vice president, saying they mustn't end the crisis too early or too late.
And that's the reason why we're not really buying at these levels, because we need to work with support and resistance, and it's just a very shallow pullback.
State Blinken reports to talk to his Iraqi counterpart tomorrow.
Okay, so that's our live squawk there. So look, we'll probably have a relatively light trading day today. We'll be watching just a few, probably the US indices markets, just to see how they're performing. Will they roll over again to the downside, or will we start seeing new highs today? Those are probably the only major opportunities that we can focus on with any sort of clarity really. And just to clarify, if there is a trade in the Nasdaq to the downside, it's a very short-term, short-held trade. Our bias for these indice markets is actually to the upside. So bear that in mind if you can. Okay, look, we're coming off the back of a long bank holiday weekend. Yesterday was quite volatile actually. We saw some significant moves. Not so much moves today with price action as it currently stands. Just a lot of sort of retracement moves, which are fine if you're a scalper and you're looking for those types of moves. They don't quite fit with our approach and what we look to do, which is kind of looking to capitalize on a bit of a swing trade. So for that reason, we'll just focus on the US indice markets just to see if we do get a little bit further selling off, then we can look at that as an opportunity. If they continue higher, then tomorrow to the upside might be more of a viable trading opportunities as more and more traders begin to come back online. Okay, so look, on that note, I'll let you guys go. Thank you very much for joining us. Please do go to our website if you have any more information about anything that we cover or any of the products and services we make available to traders every single day, where we're trading live through our own live trade rooms, and of course here through our YouTube channel. So please do give us a thumbs up and subscribe to our channel, and you'll be notified once we post any. We're going to be posting a lot of content through our YouTube channel, which I'm sure you'll find interesting. So subscribe to the channel, and we'd be delighted to get that out to you as soon as we possibly can. So look, on that note, I'll leave you to it. Thanks very much for joining us. Do take care, and we'll speak to you soon. Bye for now.